Ladies and gentlemen, good day and welcome to the IRB Infrastructure Developer Conference call for discussing the unaudited financial results for the quarter ended June 30th, 2022 and recent developments. We have with us on call today Mr. Virendra Maheskar, Mr. Dhananjay Joshi, Mr. Anil Yadav, Mr. Mehul Patel, Ms. Poonam Nishal, Mr. Sudhir Hosing, and Mr. Tushar Kavedia. As a reminder, all participant lines will be in the listen-only mode, and after the opening remarks by the management, there will be a question and answer session. Please note that the duration of the call would be 45 minutes, and any queries left unanswered after the call can be subsequently mailed to the management for adequate response and resolution. Please note that this conference is being recorded. I now hand the conference over to Mr. Virendra Maheskar, Chairman and Managing Director of the company. Thank you, and over to you, sir.
Good morning, everyone. I would like to welcome all the investors and analysts on this call. Hope you all have gone through the detailed results as well as the brand new presentation prepared in consultation with Sintra India. IRB, as you know, is a well-funded integrated developer with a strong balance sheet. Our focus for new projects continues to be BOT, TOT and HAM in that order. As an integrated developer, our business model is focused on developing an asset and riding through its journey over the next 20-25 years. As the associated project risk falls, so does the discount rate for computation of the net present value from the free cash flows generated by the project. We benefit from the expansion in cash flows of the assets as it reaches the stable and mature phase. We have tried to share this perspective in the presentation. Typically, even at a conservative revenue growth of 8 to 9%, a BOT project can yield an equity return of over 11 times at a modest 70-30 debt equity ratio during its operational lifespan, apart from the initial construction return. So the beauty of the process lies in the fact that with every new asset won, a strong visibility of returns for next 20-25 years is virtually guaranteed at a robust IRR of over 16%, and apart from that, return in the construction margin. Having run this model and established two InvITs to cater to investors with varied risk profiles, IRB's business model today has reached a stable position. Going forward, our endeavor is to execute BOT, TOT projects in a 51-49 equity ratio with GIC affiliates through the private InvIT platform. Further, considering the redeployment of construction profit, net equity requirement from IRB falls below 10% of the BOT project cost. Post the recent preferential allotment, we have surplus funds available with us for meeting the equity requirements of projects on hand and more. Thus, our corporate debt will keep reducing, and any additional debt will be self-liquidating, taken at the SPV level for new projects in the private InvIT, which will not reflect in the consolidated debt of the parent company. With regard to HAM projects, though the debt will reflect in the consolidated balance sheet of the parent company, it will get liquidated when these projects complete construction and are monetized by sale to the public InvIT. Listed company business will generate cash on an ongoing basis and will aid in regular dividend yield. With this in mind, the board has approved an interim dividend of Rs 1.25 per share for the quarter, totaling to an outflow of approximately 75 crores. Pandemic impact on traffic growth is fading away, and we are witnessing a strong traction coming back across our portfolio. Mumbai-Pune project reported a 52% growth for Q1 of FY23 year-on-year, and Ahmedabad-Baroda project grew at approximately 44% year-on-year. Taking into account the private InvIT assets, we have seen a robust growth of approximately 75% year-on-year, as some projects completed construction during the year as well. Notably, Mumbai-Pune has grown at approximately 8% quarter-on-quarter on account of traffic growth alone, while for Ahmedabad-Baroda, we have implemented a 10% tariff revision on 1st April 22, reflecting a similar growth in collections quarter-on-quarter. Effectively, even during the monsoon period, we have seen a robust toll collection of about 57 million per day for these two projects, which are well positioned to meet our estimate of over 2100 crores in collections for the whole year. We are pleased to share some interesting data points which we recently came across. Gross toll collection collected across India for FY22 was approximately 40,000 crores. The toll revenue that IRB Group has collected across the listed company and the two InvIT was close to 5,000 crores, which translates to a 12.5% market share of the total revenue collected across India. We presently operate 43 toll plazas, service 572 lanes, and cater to more than 1 million vehicles on a daily basis. This number will strengthen as we complete construction for more projects. We are pleased to inform you that we have successfully achieved completion for all the 9 projects which were transferred to the private InvIT in the initial phase. Post completion of Kishangarh-Gulabpura project and Hapur-Moradabad project, the toll rates for these SPVs have seen an increase of 78% and 65% respectively. Post construction completion of few of our other assets, the ratings of the private InvIT SPVs have also improved. This has led to lower interest costs for these SPVs. So even in this inflationary environment where the central bank has been hiking interest rates, we are seeing a decline in the interest costs for our projects as they enter the stabilization phase with improved credit rating. At the parent company level, prepayment of debt to the tune of 3,250 crores has resulted in an interest saving of almost 90 crores this quarter in the construction segment. The total order book of the company now stands at 15,700 crores, which provides good revenue visibility over next 3 years. We had touched upon likely arbitration award wins which can be expected almost annually over next 4 to 5 years, basis ongoing disputes with NHAI. In the last quarter of the previous financial year, we received an arbitration award for the Panji Goa project, and this quarter, in continuation of the favorable order for the Amritsar Pathankot project from the Honorable Delhi High Court, an award amount of 308 crores was received for being the EPC contractor for the SPV. Further, we wish to inform you that the Board of Directors of the company at the meeting held on August 5 has approved, subject to necessary permissions from concerned authorities, the transfer of the VK1 HAM project, which happens to be the first project to complete on the prestigious Delhi-Mumbai Expressway at an enterprise value of INR 1297 crores to the IRB InvIT fund. Post the transfer of VK1, 955 crores worth of debt will further reduce from the consolidated debt, and we will also receive 342 crores which will further strengthen the cash surpluses. A strong balance sheet has aided us in achieving financial closure for all our new projects at a faster pace. We today stand all guns blazing for a timely execution of these projects and have an intense focus on tapping new victories in collaboration with our global partners. This partnership has led to IRB adopting the best of global practices and policies. We have also initiated concerted efforts towards being ESG compliant and have committed to the UNGC principles as well. I would now request our CFO Tushar Kaveria to provide synopsis for the Q1 FY23 results. Over to you, Tushar.
Thank you, sir. Now I'll present the financial analysis for Q1 FY23 versus Q1 FY22. The total consolidated income for Q1 FY23 has increased to rupees 1,995 crores from rupees 1,670 crores, registering a growth of 19%. The consolidated construction revenue for Q1 FY23 have increased to rupees 1,468 crores from rupees 1,268 crores, registering a growth of 16%. The total consolidated toll revenues for Q1 FY23 527 crores from rupees 403 crores, registering a growth of 31%. EBITDA for Q1 FY23 increased to rupees 1,131 crores from rupees 745 crores, registering a growth of 52%. Interest cost has decreased to rupees 385 crores in Q1 FY23 from rupees 468 crores in Q1 FY22, declined by 18%. Depreciation has increased to rupees 203 crores in Q1 FY23 from rupees 136 crores in Q1 FY22, up by 49%. EBT has increased to rupees 543 crores in Q1 FY23 from rupees 141 crores, registering a growth of 286%. PAT after share of JV has increased to rupees 363 crores in Q1 FY23 from profit of 72 crores in Q1 FY22, registering a growth of 400%. Cash profit has increased to rupees 600 crores in Q1 FY23 from rupees 242 crores in Q1 FY22, registering a growth of 148%. Now I request moderator to open the session for question answers.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Mohit Kumar from DAM Capital. Please go ahead.
Good morning, sir, and congratulations on a good set of numbers. Sir, in the construction segment, the numbers seems to be looking slightly on the higher side, with the EBITDA margin at 44%. Have you booked something of IRB Pathankot in this quarter? Is that a fair assumption?
Yes, Mohit, you are absolutely correct. We have booked roughly 418 crores of income in Amritsar Pathankot, and there was close to 50 crores expenses on that account. And on EBITDA, it has an impact of roughly 368 crores and roughly 100 crores of taxation. On PAT side, it's close to 270 crores of impact on the PAT. If I remove the impact of this Amritsar Pathankot, then the revenue will be close to 1,050 and EBITDA will be roughly 254 crores, which translates to roughly 25-26% of EBITDA margin.
Understood, sir. Secondly, on Meerut Badao Expressway Limited, have we given the subcontracted the project, and has the work started? And is it a fair assumption that it will take around 30 months from here?
Which project are we discussing?
Meerut Badao.
Meerut Badao. So Meerut Badao project, we have achieved the financial closure. The environment clearance for the project has also been just received a couple days back by UPIDA. And we are in the process of completing the balance formalities, post which we should be able to start the construction before end of this quarter.
Understood, sir. Lastly, sir, can you touch upon the BOT opportunity have you seen any BOT, tender being floated by NHAI? And if not, do you expect some tenders to float within this financial year?
There are 3-4 opportunities which we have been able to cite, and increasingly our view is that more opportunities will come over. There was a statement by the government where they talked about 30,000 crores of projects to be awarded on PPP. So we do look forward for more projects in the list to get added.
Understood, sir. Thank you and best of luck, sir. Thank you.
Thank you. Thank you, Mohit.
Thank you. Next question comes from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yeah, hi. Good morning, sir. Thanks for taking my question. So, sir, my question was basically, as you mentioned in your opening remarks, about the state that we are in, the mature state in which we can turn assets and transfer them to the different InvITs. So, just wanted to understand, so the strategy going forward will be that any of the HAM projects that we do, we will offer them to the public InvIT and see if they like it, and of course that would be subject to their board approval, and try to monetize it that way. And the BOT projects, we will try to basically either bid along with them or transfer them to the private InvIT. Is that the correct understanding of our strategy going forward?
I think you're right. The BOT and TOT projects, which are capex heavy projects, will certainly be bid in the development platform, that is the private InvIT that we have with GIC Associates. And as far as HAM are concerned, that will continue to get bid at the IRB listco level itself. And in terms of monetization, IRB upon completion of the HAM assets will monetize them by offering them to the public InvIT, and the development platform will continue to churn assets as they complete as well.
Got it, sir. So in case of, let's say, BOT and TOT projects, I mean, we are at this point of time bidding vis-a-vis the private InvIT platform along with Sintra and along with GIC, I'm so sorry, in the InvIT. So let's say if there is, I mean, hypothetically speaking, let's say if there is a BOT project that IRB finds attractive, what, let's say, GIC doesn't want to go along with it, will we be open to bid for them on an independent basis, take them in the IRB platform, and then later think about monetizing it to some other platform, or maybe offering it to GIC InvIT later on, maybe when they would have more visibility on the traffic itself?
So I think the consensus would be to go along with GIC being there as a partner, because we would like to grow this book cautiously with having all our partners together with us rather than venturing alone. And I think that is a very clear thought process on which we are working at this point.
Got it. So the Ganga Expressway also goes into the GIC InvIT?
Yes, yes.
Okay, so all the BOT and TOT. Mumbai-Pune is still not there, right? Mumbai-Pune is still with the listed company.
Yes, Mumbai-Pune will continue to be a part of the listed company for the entire life of its concession.
So that is not going to get transferred at any point of time to the GIC InvIT?
That's correct.
Got it, sir. Sure. So just few bookkeeping questions, if I may get an answer to. So, sir, in terms of the order book that we mentioned, it's around 15,700 crores. Would it be possible to give a broad breakup? In fact, sir, I would want to request that now that we have embarked upon this very detailed presentation in which we are giving so much information, it would be really helpful. I mean, we don't have we are not working on 20-25 projects. It would be really great if we could on a quarterly basis give out the breakup of the order book as to, project-wise, if it is possible.
So you want the order book breakup, right, Vibhu?
Yes, sir. Yes, sir.
So if we divide the current order book, which is 15,700 crore, the EPC is 9,500 and O&M is 6,200. The EPC further, if we divide in BOT and HAM, then BOT is 7,100 and HAM is 2,400.
HAM is, sorry, sir, how much?
HAM is 2,400 balance order book, and BOT is 7,100.
Okay, and out of the 7,100 crore, Ganga Expressway would be around 6,500 crore?
That's right.
Got it, sir. Great. Also, sir, if I could just get the breakup of other income in this quarter?
Before 6,500, what you have mentioned, that is the total cost for the Ganga. Out of that, as you remember, last quarter we have removed GST out of order book.
Okay.
Ganga will be roughly 5,500 crores, close to 5,500 crores, and balance will be the Parks and Harmony.
Perfect. Yeah. Okay. Got it, sir. So 5,500 crores is the EPC order value of the Ganga Expressway in the order book, excluding GST.
Is excluding GST.
Got it, sir. If I could get the breakup of other income in EPC and BOT?
Yes. So in this quarter, construction income includes 56 crores of other income, and roughly in toll business we have around 15 to 16 crores of other income.
Got it, sir. And over and above that, they would also be that 412 crores. Okay, that's in the top line. Sorry, so that's not in the other income. Got it. Sure, sir. And sir, just one last question in terms of the outlook that we are looking at. Are we looking comfortable to do almost 5,000? If I'm looking at, let's say, the revenue for the EPC segment, do you think we can kind of achieve a 5,000 crore kind of revenue this year?
I think we are definitely comfortable for more, but yes, depending on the opportunities as they come, we will certainly keep bidding on them.
Got it. Sir, just one last question. I think I missed out on that. If I could get just the details of the financial closure for next year, what is the debt, equity, and grant? Of course, we know, but what is the debt and equity component of that?
Can you? I'm not able to hear you. Can you speak little slowly?
I'm so sorry. Sir, looking for the financial closure details of Ganga Expressway, the debt and the equity component.
Sure. So 1750 crores is the UPIDA grant, around 2650 crores is the debt, and approximately 2200 crores is the equity, which will be between GIC and IRB 149 basis.
Got it. And sir, what is the interest rate that we have closed the debt at this point of time?
I think we'll share that at an appropriate time, but it is a very competitive rate, is what I can confirm.
Sure, sir. I'm sure it would be. Great, sir. Thank you so much for taking all my questions, and I wish you all the best.
Thank you. Next question comes from the line of Abhineet Anand from MK Global. Please go ahead.
Yeah, thanks for the opportunity. In terms of Mumbai, Pune, and Ahmedabad, Baroda, you said that the growth have been 52 and 44% respectively. What is the volume growth for these?
So for Mumbai, Pune, it's purely on the volume growth.
Volume growth was 8%, as I mentioned in my narration, for Mumbai, Pune, quarter on quarter. There was no tariff revision in Mumbai, Pune.
And even on YOY, the 52% is purely on the volume.
Okay, because that is for every 3 years.
Yeah.
The tariff increase every 3 years. Okay.
That is right.
And for Ahmedabad, Baroda, what is the volume growth?
So if you see, the tariff hike is around 10%. On a YOY basis, if you see the 44% growth, the breakup tariff is around 10% and balance is toward the volume growth.
Almost 33%.
Okay. And so the other thing that I have is, you did mention that there are a few opportunities in the BOT side. And I think, the government is looking for TOTs as well. In case, there is a lower amount of opportunities in the BOT and TOT, and that presently our balance sheet is quite strong, how do we go about, looking into the construction business? Because let's assume the EPC, your order book today on the EPC side is around 10,000 crores, 9,500 to be exact. That could probably get consumed over the next 2.5 years. So I mean, in case the BOTs doesn't do, we look for more aggressively into HAM, which is a space actually works very crowded part. So if you can just, share your thoughts on this, your strategy.
Sure. So I think the strategy thought is very clear, as I mentioned earlier also, that the waterfall mechanism in terms of our preference would continue to be BOT, TOT and HAM. But we are not averse to undertaking HAM projects either. So while we will scout for good quality BOT projects or even TOT projects which are capex heavy, if there are large size HAMs that come up with the revised format, wherein the pre-qualification criteria has been made stringent and the certain areas where people used to have some advantage of tweaking the bids have been taken away now. So we expect the HAM bids also to rationalize going forward, and we will continue to scout for those opportunities as well. So the idea would be that the construction business that we have on hand and the kind of resources and manpower that we have continues to grow at a steady pace, is the kind of order flow that we will continue to chase. Hello?
Hello, sorry. So if you can just elaborate on your current order book of the EPC for 23, 24, 25, what could be a broad breakup of this 10,000 crores of EPC? How can that span out without any incremental orders I'm talking about?
So with present order book of 15,700 to be executed in next 2.5 to 3 years, the current order book breakup is 7,100 in BOT. So EPC order book is 9,500, O&M is 6,200, 7,100 is towards BOT, which includes 5,500 for Ganga and 1,600 towards Palsit, and 2,400 crores is towards the HAM project.
Okay, thank you, sir.
I think if we go by year-wise breakup, roughly 4,500 will get executed in this year and around similar in the next year. And in the last year, there will be 2,000 crores of execution as EPC is concerned. And O&M around 600 to 700 crores on per annum basis, and that will be on the increasing trend.
Assuming no new bids.
Yeah, understood. Yes, understood, sir. Understood. Thank you, sir. Thank you.
Thank you. Next question comes from the line of Nikhil from HDFC Securities Limited. Please go ahead.
Good morning, sir. Am I audible? Hello.
Yes, please go ahead.
Congratulations on the good set of numbers, sir. So my first question is, what is the amount of loss funding, and if you could give us the bifurcation into cash and non-cash component?
Not clear. What loss funding?
So loss funding in case of private InvIT, and also the bifurcation into cash and non-cash.
So if you, for private InvIT, I guess all the projects are now operational, and for this quarter there was no loss funding because all projects are now self-sustainable in case of private InvIT. And I guess we have also shared on the in our presentation one slide where the cash EBITDA is somewhere around 250 crores and the net debt is somewhere around 9,000 crores. So roughly, if you see the net debt, the EBITDA and net debt, there is a surplus rather than any shortfall.
Okay. So my next question is, in case of all the completed projects, what is the quantum of change of scope works?
For this quarter, I guess it's hardly 25 to 30 crores.
Okay, 25 to 30 crores.
Just quick additional input on the earlier question. As regards private InvIT is concerned, given the low debt of almost 9,000 odd crores in the private InvIT, it has never been a situation, even in the past, where any cash loss funding was ever made by IRB towards the private InvIT. It has been self-sustaining all across in the past as well.
Okay, sir. Understood. And so what is the amount of order inflow for the quarter?
We don't give any order inflows in the quarter. I think there was no new quarter the order add because post-March hardly any projects have actually been awarded.
Okay, sir. And sir, if I may, I believe that you have given the bifurcation of the arbitration award into the the impact of it on the EBITDA and the PAT level. I missed out on that point. Do you mind repeating the same point?
Yes, sure.
Pathankot, Amritsar, as I explained earlier, the construction revenue included 418 crores of revenue. On expense side, the 50 crores was the expenditure, and on EBITDA side, it was close to 368 crores of EBITDA, and 100 crores was the taxation, and net impact on PAT was roughly 270 crores.
Okay, sir. Understood. Those were my questions. Thank you, and all the best, sir.
Thank you.
Thank you. Next question comes from the line of Prem Khurana from Anand Rathi. Please go ahead.
Hello. Yeah, thank you for taking my questions, sir. Sir, I think in answer to one of the participants earlier, Mr. Mahesh spoke about some 3 to 4 odd opportunities that we've identified on BOT toll side. So possible to kind of put a number to this, in terms of value rupees that you expect, this would, if we get to have success with these, let's say 3, 4, what will be the total value that we would be able to add, and what is the inflow target that we have for FY23?
I'm not able to hear you clear at all, but I could sense that you are asking about the new BOT opportunities that is coming up, and I think the bids are still some distance away. But certainly, my sense is that in terms of order book addition, as I mentioned earlier, I think it should be 5,000 to 7,000 crores of order additions that one can expect during the entire financial year is what my guess is.
Sure. No, I was asking for, I mean, the 3 to 4 opportunities that we have already identified. What will be the total value of these 3, 4, I mean, in terms of rupees crores that we already have identified? And there will be, obviously, I understand, and there will be subsequently we'll get to have more opportunities and you will go and bid, and we're targeting 5,000-7,000 crore rupees. But what will be the number for these 3, 4 that you already identified?
It would be around 240 kilometers of 6-laning and 4-laning projects which are expected, which has been identified. So the cost and all has not come yet. So that we are still expecting.
Okay, sure. And on this VK1 that we've decided transfer to public InvIT, so I mean, if I understand, maybe you used to give us a sense. I mean, you used to give us a sense that we're targeting around 11-12% kind of equity IRR. So just want to understand, we're selling it at a premium to our equity infused, right? I mean, to public InvIT, which essentially would have meant that the IRR number could be even lower than what we spoke about in our comments. So, I mean, adjusted for PIM part, is it still comparable to that 11-12% that we were targeting initially, or how would the math work for public InvIT? I mean, why I want to understand it, or eventually, I mean, this would be taken up by the board and the unit holders of the public InvIT, and if the return is not, I mean, to generally the target that we tend to have, I mean, there could be a situation that could take some time for them to kind of confirm us the asset acquisition. So what will be the total PIM that we would have received, and which is where, I mean, the annuities would not be on 2,000 crore rupees of bid project because that we used to give for this project. So what will be the total PIM part in this? How is the bid project cost changed, I mean, over the years for this?
As you are aware that bid cost project would have changed in the line with the inflation. But first I would like to take this, what kind of equity return to the public unit holder. So roughly we are transferring this project at 12% cost of equity, that 12% equity IRR for the public unit holder. But there the public InvIT predominantly will be funding 50% through retained internal accruals and 50% through debt. On levered equity IRR, it's close to 16 to 17%. If I take 50% as a equity and 50% as debt, then that translates 16 to 17% kind of return to the public InvIT. And this is based on the actual annuity which can be realized to the public InvIT.
Any possible to share your thoughts on this 200 odd crore rupees of money that we're supposed to receive over and above the equity consideration towards the project management? Because when I was looking at my old sheet, I mean, the O&M number that we've kind of bid with is around 2.7 crore rupees, I mean, which would get adjusted to the inflation number. So how did we arrive on this 200 odd crore rupees of number, I mean, for project management?
With respect to, this is the O&M for the project for 15 years. And in terms of, if you look at the O&M at what we have bidded, what NHAI is going to pay, you are aware that everybody bid for the lower O&M, but thereafter one has to consider the actual O&M on the project. So if you remember, at the time of when we have backed this project, that time also we have shared that 12 to 13 crores will be per annum O&M, because you can't maintain the road with a 3 crores of O&M. And even the public InvIT has taken a third party evaluation for the O&M, and which is almost 7 to 8% higher than what O&M price IRB is providing. Further, public InvIT has a right that at any time, if they find better pricing, they can change the O&M contractor.
One more point to add here, as Anil rightly pointed out, the earlier HAM model was always tweaked with a lower O&M that people used to bid. But when we used to take the project for financing to the lenders, we have always factored the realistic O&M that we would be spending on the project. And even there, whatever cash flow we had factored as a O&M, the same was also weighted by public InvIT as a part of this process. And as Anil said, after taking a third party confirmation, they have gone ahead with the O&M number.
Sure, sir, sure. And just one last from my side, and if you could help me with the appointed date for Chittoor Thachur and on this Amritsar Pathankot, we've realized 75% as of now. When do we expect to have the balance 25% come to us?
So Chittoor Thachur we are expecting in 30-35 days, the appointed date.
Okay. And how about the balance 25% from Amritsar Pathankot claims?
I think should come through in this financial year itself. I don't want to give a date on that, but we are pursuing it to our best of our abilities, and certainly before end of this financial year is what we expect.
Sure, sir. Sure. Thank you. That's it from my end. Thank you.
Thanks, Prem.
Thank you. Next question comes from the line of Abhiram Iyer from Deutsche Bank. Please go ahead.
Hi, sir. Congratulations on a strong set of numbers. My quick question was with respect to the construction revenue and EBITDA. Splitting out the Pathankot revenue and EBITDA, as you mentioned, the 418 crores and the 50 crores expenses. The other part of the contract revenue has actually sort of been flat and has actually gone down YOY, and especially compared to, say, 6 months ago or 12 months ago. So is there any particular reason for this, and what's the sort of view going forward?
If you are comparing with the trailing quarter, there was also Goa arbitration award, which was accounted in the trailing quarter. Secondly, as we are about to get appointed date for various projects, so now this revenue is going to increase. Third aspect, which is very important in the last quarter, to align basically with respect to GST. Earlier revenues were booked along with the GST. Now those revenues are booked excluding the GST, and to that extent, last quarter we have reduced our order book also. So if one wants to compare, one has to divide by 88% to arrive the real number on the construction revenue. So I think if we do that, then the construction revenues are comparable with the trailing quarters or trailing year, and in fact it will be 5-7% higher than the compared with the trailing quarter or previous year's quarter.
Got it, sir. Thank you. I'll get back in the queue.
Thank you. Next question comes from the line of Alok Deora from Motilal Oswal. Please go ahead.
Good morning, sir, and congratulations on good numbers. Sir, just wanted to understand on the order inflow side. So, this in HAM also the NHAI is considering reducing the equity as in their contribution from 40% to 20%. So how do you see that space? And also in BOT toll you mentioned about certain projects coming up. So just if you would elaborate a little more on that. I mean, how many projects we can look to win in this year?
So look, I think as you rightly pointed, as the fiscal tightening is setting in, we certainly see an endeavor from NHAI to entice more private participation. And they have already talked about, even I have read the article which you are mentioning, where they talk about reducing the annuity to 20% during the construction phase. So if one looks at the way HAM projects have been bid in the past, what the lenders used to do is they used to say that out of the 100%, 40 is getting funded by NHAI. So the balance 60 used to be funded at a debt equity ratio of 80-20 or 75-25. And the effective equity in the project that the developer was required to put in was 12 to 15%. Now, if the NHAI contribution during construction goes down to 20%, automatically the upfront equity that the developer will have to put in will certainly significantly go up to anywhere between 25 to 30%. And I think that is one big defining moment to my mind, because the moment that happens, it will bring in a big amount of discipline in HAM bidding, because the irrational exuberance that is being seen presently, because there is no real equity getting into the HAM project, because it is a churn of mobilization advance that keeps happening and there is hardly any skin in the game, that will certainly change big time. and serious players with good balance sheets will be able to come and pick up projects at a same pricing, which will bring in more discipline in execution, and all the fraud will start going away. So my sense, this is a big change that we are looking forward to. Apart from BOT, where I said that the government had talked about a total of 30,000 crore projects to come up on BOT in this fiscal. That was an article which I am quoting, which appeared a few days back in PTI. So going by that, we expect close to 30,000 crores worth of projects to be tendered on BOT.
So, sir, this HAM, the reduction of NHI contribution, is it just limited to the article, or have we had any sort of discussion or any further updates on that? If you could share, if you have been in discussion on this part.
I think that is a serious thought process, what we have been able to understand so far. There was even a discussion where they were thinking of giving some kind of a revenue guarantee on the BOT projects and remove the traffic risk on the BOT aspect as well. So a lot of thought process is happening between us as stakeholders and the regulators and the client, that is NHAI. And I think there is a definite positive mindset with which everyone is working as to see how these models are made palatable and generate good returns, at the same time deliver a strong asset to the government which has less problems going forward.
No, sir. That would be all right. Thank you. The best, sir.
Thank you.
Thank you. Next question comes from the line of Karan Kapadia from Systematics. Please go ahead.
Yeah, sir. Good morning. Hello. Am I audible?
Yeah, I can hear you.
Yeah. Good morning, sir. I have a question on private InvIT. Can you please share more insights about the traffic growth projections and tariff revision expected for the private InvIT projects in the coming quarter?
So private InvIT projects, as I said earlier, that all the projects are now operational, and with the tariff hike somewhere around 10% for most of these projects, the revenue growth what we have envisaged for this year with a decent traffic growth of 5.5% to 6%, the revenue growth is
5.5%.
Yeah.
Okay. And any more guidance that you can give for the tariff revision means in future? More than 10%, or we can assume exact 10 around?
I think the tariff revision is clearly linked to inflation, and going by the present numbers, certainly they appear to be going more north in terms of more than at least 5% even for the upcoming year, depending on where the inflation is right now. But I think even Bombay-Pune would have a tariff revision in the upcoming year. That would be a significant revenue driver for next year, because 18% tariff revision will become due on 1st April 2023.
Okay, sir. Thank you for taking my question. I wish you all the best for future quarters. Thank you.
Thank you.
Thank you. Next question comes from the line of Nikhil from HDFC Securities Limited. Please go ahead.
Thank you for the follow-up opportunity, sir. Sir, I had one question. When is the consideration for VK1 is expected?
So I think as we have talked about in previous quarters also, this will take another 2 to 3 months to complete the transaction. We expect that consideration to be received by October this year.
Okay, sir. Thank you.
Thank you. Next question comes from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yeah, hi. Thanks for taking my question again. Virendra, just one quick follow-up to what you mentioned about the changes in the HAM model. Now, definitely, I mean, as you mentioned, that if the government decides to decrease the grant share during construction period from 40% to 20%, this will bring in more discipline into the bidding, and not everybody will be able to bid for that. But I just wanted to ask that, in your opinion, and like we have been in industry before everybody, and we basically pioneered the BOT and these models. So in your opinion, do you think that will given the kind of industry that we are in right now and the state of players that it is, that most players would actually, most of the players who are right now bidding for the HAM projects might actually maybe stop bidding or maybe reduce their and it might reduce their appetite for these HAM projects by a significant amount. So in turn, NHAI might actually lose out on awarding a lot of projects on BOT or on HAM, sorry. Do you envisage that happening, that right now, like they award around 40-50% of projects on HAM projects, they might not be able to do that, and then that might actually spill over maybe to more EPC and HAM, more EPC and BOT?
I beg to differ with you. See, I don't think that all the players will stop bidding on HAM. I don't think that is going to happen, because ultimately if the nation building has to happen, there will be many more hands required to undertake this. So what will happen is, today ultimately whatever equity one is putting into the project, he is recovering that equity by some means or the other, whether you are taking part of the equity back as some element of the construction margin, or you are keeping that everything as a back-ended return on the annuity itself. But if your equity amount goes up, naturally all these players will have to bid a little more sanely, where they will have to factor higher equity into their working, which will automatically bring the bidding to a rational level. Because today what is happening is there being no real equity into the project. People are bidding with extremely low margins and trying to outbid others and destroy value and creating problem for themselves in the future. But the moment the lenders would say we want more money to be seen upfront when you start the project, automatically a project discipline will set in and exuberant pricing will automatically get corrected, is my view. So yes, now there will be certainly a dichotomy that the client as a government will have to look at as to whether they want to then on the improved bid parameters want to give more on HAM, or to do away or not do away but give more on the BOT by paying the same amount of say grant during construction and save the balance 80% from being funded from their coffers over 15 years and invite more of private money into the asset building. So I think this is a call that government will have to take. But if we look at the fiscal discipline that the government is putting in place, I think it will balance out somewhere in between.
Got it, sir. Got it. Thank you so much for those wonderful insights, sir. Thank you so much. Wish you all the best again.
Thank you. Thank you.
Thank you. As there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to Mr. Virendra Maheshkar for closing comments.
Thank you everyone for this interesting discussion, and we look forward to have all of you again when we declare the next quarter results, and wish you a great week ahead. Thank you so much.
Thank you. On behalf of Chorus Call, that concludes this conference. Thank you for joining us. You may now disconnect your lines.